Economics lecture number 4. Mutual funds mobilize the savings of general public and invest them in stock market securities. They are first becoming an important medium of mobilizing the savings of middle class and small investors by minimizing risk and raising the rate of returns. The first mutual fund to be introduced in India was way back in 1963 when the government of India launched a unit Trust of India UTI. UTI enjoyed a monopoly in the Indian mutual fund market till 1987. This market was made open to private players in 1993. The first private sector fund to operate in India was Kothari Pioneer. What is NAV? NAV means net asset value. The investments made by a mutual funds are marked to market on daily basis. In other words, we can say that current market value of such investments is calculated on daily basis. A navy is arrived at after deducting all liabilities except unit unit capital of the fund from the realizable value of all assets and dividing by number of units outstanding. So NAV is equal to value of assets minus value of liabilities, oblique, or you can say divided by number of units understanding. NAV on a particular day reflects the realizable value that the investor will get for each unit if the scheme is liquidated on that date. Now it's time to understand stock exchanges. Stock exchange or share market plays a dominant role in mobilizing resources for corporate sector. It is a market for dealing in shares, debentures, and financial securities. In the stock exchange, shares and debentures are bought and sold for investments as well as for speculative purposes. There are 23 stock exchanges in India. Difference between shares and debentures. Ownership: the share of a company provides ownership to the shareholder. Debenture holders are creditors of a company who provide loan to the company. Certainty of return: no certainty of return in case of loss for the shareholder. Debenture holder receives the interest even if there is no profit. So it's really important, if you are a debenture of any company, you should receive you must be receive the interest if there is no profit to the company. Convertibility: shares cannot be converted into debentures, but debentures can be converted into shares. Control: shareholders have the right to participate and vote in companies meeting. Debenture holders do not possess any voting right and cannot participate in meeting. Difference between stocks and bonds. Stocks or share of stocks represent an ownership interest in the corporation. Bonds are a form of long term debt in which the issuing corporation promises to pay the principal amount at a specific date. Stocks pay dividends to the owners, but only if the corporation declares a dividend. Dividends are a distribution of a corporation's profit. Bonds pay interest to the bondholders. Generally, the bond contract requires that a fixed interest payment be made every sixth month. Let's discuss some other terms like equity shares. An equity share, commonly referred to as ordinary share, also represents the form of fractional ownership in which shareholder as a fractional owner undertakes the maximum interpersonal uh, risk associated with a business venture. Then the holder of such shares are members of the company and have voting rights. Rights issue or rights share: the issue of new securities to existing shareholders at a ratio to those already had. Preferred stock or preferred shares: owners of these kinds of share are entitled to a fixed dividend or dividend calculated at a fixed rate to be paid regularly before dividend can be paid in respect of equity shares. Bombay Stock Exchange BSE, located at Dalal Street, Kala Ghoda, Mumbai, was established in 1875. It is Asia's first stock exchange. More than 5,500 companies are publicly listed on the BSE, Bombay Stock Exchange. Okay, the S&P base in Sensex, also called the BSE 30 or simply the Sensex, is a free float market weight stock market index of 30 well established and financially sound companies listed on Bombay Stock Exchange. National Stock Exchange NSE, located in Mumbai, was established in 1992. NSE's flagship index, the CNX Nifty, is a 50 index. Now it's time to understand Securities and Exchange Board of India, SEBI. SEBI, Securities and Exchange Board of India, was initially constituted on April 12, 1988 as a non-statutory body through a resolution of government for dealing with all matters relating to development and regulation of securities market and investor protections, and to advise the government on all these matters. SEBI was given statutory status and power through an ordinance promulgated on January 30, 1992. Functions of SEBI: to safeguard the interest of investors and regulate capital market with suitable measures, to regulate the business of a stock exchange and other securities market, to regulate the working of a stock brokers, sub brokers, share transfer agent, trustees, merchant bankers, underwriters, portfolio managers, etc., and also to make their registration. Credit rating agencies: these are the companies that assign credit ratings which rate a debtor. Credit rating agencies: these are the companies that assign credit rating which rate a debtor's ability to pay back debt by making timely interest payments and the likelihood of default. The Indian credit rating industry mainly comprises of the following: CRISIL, Credit Rating Information Service of India Limited. So CRISIL's HQ is in Mumbai. Then ICRA, then CARE, then ONICRA, ONICRA, which has HQ in Gurugram. Then FITCH, India's Rating and Research, its HQ in Mumbai. CRISIL is the largest credit rating agency in India with the market share of more than 60%. Leading credit rating agency in the world, Standard and Poor's, S&P, its headquarter in New York, US. Then Moody's, HQ in New York and US. Then Fitch, HQ, New York and US. These three control 95% market worldwide. Let's discuss something important: primary market. It is the part of the capital market that deals with issuing of the new securities. Companies, governments, or public sector institutions can obtain funds through the sale of new stock or bond issued through primary market. For our purpose, for our purposes, you can think of the primary market as being synonymous with an initial public offerings, or you can say IPO. The issuing company or group receives cash proceeds from the sale, which is then used to fund operations or expand the business. Secondary market, that is also called the stock market. It is the financial market in which previously issued financial instruments such as stock, bonds, options, and futures are bought and sold. The defining characteristics of the secondary market is that investors trade among themselves. That is, in the secondary market, investors trade previously issued securities without the issuing company's involvement. For example, if you go to buy Reliance Industries stock, you are dealing only with another investor who owns a share in Reliance Industries. Reliance Industries, the company, is in no way involved in the transactions. Bull market, it is defined as the marketplace wherein the price of shares go up or are anticipated to go up over the period. This type of market encourages buying or as the conditions are favorable. The basic features of such a market are optimism, high returns, and the investors' confidence. Those investors who expect the price to rise are called bulls, and the sentiment is known as bullish. Okay, then bear market, a financial market which is characterized by a consistent fall in the prices of shares, is called a bear market. In this market, pessimism is prevalent and the investors take a short position due to anticipation of loss by holding. Then shares are sold by the investors. In the bear market, stock trading declines, returns are low, investor confidence is low, and often accompanied by the recession in the economy. Those investors who expect the prices to fall are called bears, and the sentiments is also known as bearish. Insider trading, the illegal practice of trading on the stock exchange to one's own advantage through having access to confidential information. It includes tipping others when a person has any sort of non-public information, that you can say insider trading. Insider trading, it's okay, it's insider trading. Now it's time to understand insurance. Insurance is a subject listed in the concurrent list in the seventh schedule to the Constitution of India, where both center and states has can legislate. The insurance sector has gone through a number of phases by allowing private companies to solicit insurance, and the insurance sector has gone through a number of phases by allowing private companies to solicit insurance and also allowing foreign direct investment of up to 49%. The number of insurance has since gone up to more than 50. Life Insurance Corporation LIC, established in 1956, September 1, 1956, head office in Mumbai, and zonal offices are having 7. Okay, in UPA you have LIC's office, which is you can in Mumbai. Sorry, in Kanpur. Okay, General Insurance Corporation GIC, established in January 1, 1973. Since 2002, the following four companies have been delinked from GIC and operate as independent insurance companies wholly owned by Government of India, that is National Insurance Company Limited, Kolkata, the New India Insurance Company Limited, Mumbai, the Oriental Fire and General Insurance Company Limited in New Delhi, and United India Fire and General Insurance Company in Chennai. Reforms in insurance sector constitutes an important segment of financial market in India and plays a predominant role in the formation of capital in the country. The reforms in the reforms in the insurance sector started with the enactment of Insurance Regulatory and Development Authority Act 1999. The act paved the way for the entry of private insurance companies into the insurance market and also constitution of Insurance Regulatory and Development Authority. So that is you can call it ILDA. Okay, Insurance Regulatory and Development Authority. ILDA was constituted in on 19 April 2000 to protect the interest of holders of insurance policies and to regulate, promote, and ensure orderly growth of insurance industry. The authority consists of a chairperson, 3 whole-time members, and 4 part-time members. Now it's time to understand currency and inflation. Currency rupee was first minted in India during the reign of Sher Shah Suri around 1542. In 1861, the government of India introduced its first paper money, rupee 10 notes, in 1864, and all. Okay, then in 1898, the Indian rupee was tied to gold standard through British pound. Prior to this, the Indian rupee was a silver coin. Rupiah in Sanskrit means silver, which made the rupee to be pegged at a value of 1 shilling 4 pence. It means 15 rupees is equal to 1 pound. Officially, the Indian rupee has a market determined exchange rate. RBI intervention in currency markets is solely to deliver low volatility in the exchange rates and not to take a view on the rate or direction of the Indian rupee in relation to other currencies. All coins and 1 rupee note are issued by Government of India. That's why 1 rupee note doesn't bear the signature of RBI, it bears the signature of Finance Secretary, Government of India. So it's really important. In on 1 rupee note, you can have the signature of Finance Secretary instead of the Governor of RBI. Demonetization of currency, it refers to the withdrawal of currency from circulation. It is done to ambush black market. Rupees 1000 and 10,000 banknotes, which were then in circulation, were demonetized in January 1946. Rupees 500 and 1000 banknotes were demonetized on November 8, 2016, although rupees 500 note were remonetized by a new series note. Devaluation of currency refers to reducing value of the Indian rupee in comparison to the leading currencies in the world market. First devolution done in September 1949. Okay, that time finance minister was there in John Mathai. Fourth devolution done in July 3, 1991. Finance minister that time Manmohan Singh. The basic objective of devolution is to reduce deficits in balance of trade by making exports relatively cheap and import costly. The RBI decides the volume and value of banknotes to be printed each year. The quantum of banknotes that needs to be printed broadly depends on the requirement for meeting the demands for banknotes due to inflation, GDP growth, replacement of solid banknotes, and the reserve stock requirements. The Government of India decides the quantity of coins to be minted on the basis of indents received from the Reserve Bank. Hard currency, it is the currency usually from a highly industrialized current country that is widely accepted around the world as a form of payment for goods and services. A hard currency is expected to remain relatively stable through a short period of time and to be highly liquid in the forex market. Another creation of a hard money for a hard currency is that the currency must come from a politically and economically stable country. US dollar and euro are good examples of hard currencies. So that is really important, that a US dollar and euro, these two are hard currencies. Soft currency, or soft currency with a value that fluctuates as a result of country's political and economic uncertainty. As a result of the this currency's stability, foreign exchange dealers tend to avoid it, also known as weak currency. Currencies from the most developing countries are considered as soft currencies. So here I'm going to discuss printing of securities and minting in India. So India Security Press in Nashik. Okay, so this one is printing of securities and minting. Okay, so what are the main one? India Security Press Nashik, Security Printing Press Hyderabad, Currency Notes Press Nashik, Bank Notes Press Devas. Okay, then modernized currency notes press at Mysore and Salboni. Okay, then security paper mill at Hosangabad in Madhya Pradesh, and coins are minted at 5 places, mainly Mumbai, Alaipur, Kolkata, then Safiabad, Hyderabad, which is in Hyderabad, then Cherlapalli in Hyderabad, and Noida in UP. The coins are issued for circulation only through RBI. Security Printing and Minting Corporation of India Limited owns Nasik and Devas presses. Inflation. Other portion I will cover in the next audio. Thank you.